In our high interest rate environment, more people have been on the hunt for higher yielding investments after the Fed's been aggressively raising interest rates over the last year. And it's a trend that I think is probably going to continue as interest rates continue to remain high. So in today's video, we're going to take a look at ticker symbol TLTW, which is the iShares 20+ year Treasury Bond BuyWrite strategy ETF. It's a fund that I've seen a lot of people have been requesting, both in the comments section as well as over on our Patreon. And there's a lot of really attractive features to this ETF, including the fact that it now offers a dividend yield that exceeds 15%, and it also pays dividends on a monthly basis. So let's take a deep dive into TLTW and see if that 15% yield this fund offers is a good investment opportunity for people seeking income. According to this fund's website, the iShares 20-year Treasury Bond BuyWrite strategy ETF seeks to track the investment results of an index that reflects a strategy of holding the iShares 20-year Treasury Bond ETF while writing 1-month covered call options to generate income. Basically, TLTW is a covered call ETF that writes call options on TLT, which is the iShares 20+ year Treasury Bond ETF. TLTW is less than a year old, having been launched back in August of 2022. Right now, this fund currently trades for $33.59 per share, and it offers a massive dividend yield of 15.31% according to Seeking Alpha. It pays monthly distributions, with their last being for about 35 cents per share. The issuing company behind TLTW is iShares, which is the largest ETF company in the world by assets under management. iShares is owned by BlackRock, which is also the largest asset manager in the world. iShares launched 3 new covered call ETFs last year, attempting to cash in on the covered call craze that's become pretty popular. The other 2 funds they launched are the iShares High Yield Corporate Bond BuyWrite Strategy ETF, ticker symbol HTGW, and the iShares Investment Grade Corporate Bond BuyWrite Strategy ETF, ticker symbol LQDW. All of them currently offer yields of around 15% and pay monthly dividends, so I'll probably get around to covering all of them in the future. iShares released this promotional product brief that gives a good overview of these ETFs. The 3 main features of TLTW include enhanced monthly income, diversification, and easy access to earning revenue from options for more passive investors. They also have this handy investment process graph that shows how this fund works. First, TLTW invests the majority of its assets in the respective underlying iShares bond ETF, which in this case is the iShares 20-year Treasury Bond ETF. You can see that according to their website, this is the only holding as being listed in this fund. The next step involves writing call options that expire 30 days after issuance. The number of option contracts will correspond to the number of ETF shares owned by the fund. Step 3 involves replacing the existing option with a new one. The current option will be repurchased on the day before expiring, and a new 1-month option is written. Then finally, the last step is paying out the dividends earned by the option premiums to shareholders. It also pays the dividends received from TLT as part of the distributions. It's a similar strategy to a lot of other covered call funds that exist, including the ones from Global X like QILD. The difference is that TLTW doesn't write covered calls on a broad index, but rather on a treasury ETF. If we look at this fund's share price since being launched, we can see it's currently down over 15% since August of 2022. But if we compare TLTW with TLT, the underlying ETF that TLTW writes call options on, we can see that it's also been down since August of 2022. The reason why both funds were down a lot in 2022 has to do with the bond markets. If we look back further at the performance of TLT since 2002, you can see this ETF did well for more than 2 decades, having the occasional price spring every now and then. But then very recently going through a very dramatic price decline in 2020 due to the pandemic, and then getting crushed starting in early 2022. As I've mentioned in the past, the reason why treasuries, bonds, and other forms of corporate debt and fixed income securities lost so much value is because 2022 was the worst year in history for the bond markets. In 2022 and 2023, we saw the Federal Reserve make record-breaking interest rate hikes that we've never seen before. And as we all know by this point, high inflation was the main cause for this chaos. Unfortunately, it's been sticking around longer than anticipated. As a result, the Federal Reserve announced that there could be some additional minor increases in interest rates later this year. If you invest in fixed income securities that hold debt, it's really important that you know how interest rates impact their value. When the Feds raise interest rates, then the value of bonds decreases, but when the Feds lower interest rates, then the value of bonds increases. The 2 main events have an inverse relationship to each other. When interest rates rise, then existing bonds that are paying lower interest rates become less attractive, causing their share prices to fall below their initial par value in the secondary market. When interest rates fall, then bond prices typically rise, and that's when these types of investments become more profitable. Fortunately, in 2023, treasuries have been leveling off so far, but remember, if the Feds do continue to raise interest rates again like they said they probably will, then we could see the value of treasuries fall back down again. Let's look again at the return of TLT and TLTW since last August. TLTW is down almost 15% since last August, and TLT is down over 8%. If we look at the total return for this year though, there's been a slight recovery. Just by going off share price alone, TLTW is up 1.79% for the year, and TLT is up 2.12%. So while it looks like the covered call fund is trailing the Treasury ETF it writes options on, we need to factor in the total return for 2023 with the dividends being reinvested back into each fund. Using the drip calculator from Dividend channel, we can see that TLTW has had a year-to-date return of almost 9% compared to just the Treasury ETF at 3.17%. These are significantly better returns than simply looking at the share price. If you know a lot about covered call funds, then you'll know that the dividends play a significant role in the overall return. But one thing to keep in mind with TLTW and most covered call funds is that they don't pay a consistent dividend each month. But the amount that this ETF pays each month varies a lot more compared to other covered call funds that I've seen. For example, if we look at the dividend history of TLTW, we can already see that its dividend can change pretty significantly from one month to another. You can see in March of 2023, this ETF paid a dividend of about 31 cents per share, but then in April, the dividend jumped all the way up to 65 cents per share. To compare that with another covered call fund like QYLD, this fund doesn't see its dividend swing nearly as much from one month to another. It's rare for QYLD to have its dividend change by more than a couple cents in a 30-day period. There's a couple things that impact the dividend amount that this fund pays, which includes market volatility as well as the dividends that are issued by the underlying ETF, TLT. For investors who want to live completely off dividends and not by selling shares of a stock or a fund, but by pursuing a high-income investing strategy, need to keep in mind that these covered call funds can provide high amounts of income. But because the dividends can change so drastically from one month to another, I don't support the idea of putting all of your savings into them. If you build up a very large position in a fund like TLTW and you get $3,000 in dividends one month, but then the next month you only get $1,500, then that can obviously cause a lot of chaos for budgeting your life expenses. I always recommend that those who want to live off dividends should spread their investment dollars across different types of higher yielding assets like business development companies and closed-end funds, as well as at least one good dividend growth ETF like SCHD. Not only will this add more stability to your income, but a dividend growth ETF will also help ensure that your income is rising with inflation. So after looking at everything and considering interest rates, what should our opinion be of this ETF? Judging by the past performance of TLT, TLTW can definitely be a profitable investment. But based on the swings that TLT has seen, it's an ETF that I think needs to be bought at strategic times compared to a covered call ETF that writes call options on a broad market index. In our high interest rate environment and with at least one more rate hike expected this year, we might see treasuries continue to struggle and even go down further later this year. According to a survey done by BuyWrite, most economists believe that at least one more rate hike will happen before the Feds decide to start making cuts. 18% think at least 2 more increases will happen, and 22% think 3 will occur. If that is the case, and knowing what we know about treasuries during interest rate hikes, then I think it makes sense to believe that TLTW is going to continue to go further down as the rate hikes happen. But according to most economists, by the time 2024 rolls around, that's when interest rates are expected to start falling. When the Feds start doing that, then I think this ETF is going to be a lot more appealing. Around the time rate hikes are done and before we're about to see rates decline, then I think that's going to be the best opportunity to invest in this ETF. Until that happens, I'm perfectly fine on waiting and considering this ETF later in the future. But with that being said, that's going to wrap up our look at TLTW. If you're interested, feel free to check out my Patreon where you'll find an Excel sheet of all of my holdings updated monthly. Plus, it'll give you access to our Discord channel where we discuss higher yielding types of investments. With that being said, thank you all so much for watching today's video. If you liked what you saw, then feel free to hit that like button below and click subscribe if you want to see higher yielding investing strategy content. Again, thank you all so much for watching today's video, and until next time, take care.